This is a complete trading session from start to finish. I use Heiken Oshi candles and 15-second time frame. I set trade expiration to 1 minute. Among indicators, I choose a rune, parabolic and RSI. For parabolic, I set the acceleration to 0.03. For a rune, I leave the period at 25. For RSI, I set the period to 19. I choose instruments with favorable payout conditions. And now I start looking for setups. This is the first setup of this session. Parabolic dots are below candles. Blue line of a rune is above red. RSI is above 50. If the current candle finishes without lower wick, I am placing a buy. When using this strategy, for bullish entries, the signal candle must close bullish before I enter. If you are curious, the platform I'm using is linked in the description. Let's see how this trade develops. First candle made a promising upward move. I'm risking 10% of the balance per trade this time, so it would take a long series of losses to wipe out the account. For beginners, I would suggest risking around 1% per trade instead. You may have noticed that in some of my other videos I used a very different risk model. There's a reason for that, and I'll cover it in a future video. If you're curious what happens when I use a much more aggressive approach, you can check out the challenge with this strategy as well. There is some pullback after the initial move. There is still time to recover, but also to turn down. Bullish momentum appears in the final seconds. Finishes in profit. The same requirements are still satisfied for a bullish entry. So if this candle ends up without a lower wick too, I will continue trading in this direction here. And there it is. Now I can only wait until the trade expires. RSI stepped in the overbought range, but as we've seen in the previous and many other videos of mine, it does not act as a reliable sell signal on its own. First candle was promising, but it's far from the end. Buyers and sellers keep fighting, but the move is still in the right direction. And in this type of trading, direction at expiration matters more than the size of the move. It almost fell back to entry. That's not what the trader wants to see at this stage. It looks better, but the market can cause harsh surprises even in the last seconds. Conditions are still met, so I placed another one. Every trader has different preferences. I've covered many other strategies on the channel if you'd like to compare them. The move isn't particularly strong yet, but there is also no strong rejection. Sometimes it takes more time to develop meaningful momentum. Sometimes it might not happen at all. That's a strong retracement in the middle. Let's see if price recovers. This might not make it. And this one finishes out of the money. The setup looked good, but all trends end sooner or later. I look for the next entry elsewhere. This seems fine, but I'd prefer to teach also how the bearish entry of this strategy works. I need red candles now. This might be the one. The parabolic dots are above the candles. Red line of a rune is above the blue. RSI is below 50. If the candle finishes without an upper wick, I am placing a sell. For bearish entries of this strategy, I only enter if the signal candle ends up bearish. At least based on my own testing, it performed better when the candle was in line with the trade direction. That's not the case for all the strategies that I have tested. Of course, your results may differ. The price starts to move down by strength. Seems like a boring trade so far, but strong moves are sometimes followed by strong corrections. Never underestimate the market. It has to be on the trader's mind at all times that trading carries risk. This overall looks like a solid bearish move. Let's see if it holds this level till the end. Finishes positively. All the indicators still meet the requirements of a bearish entry. So if this candle closes bearish with no upper wick, I will place another sell. And it does. Not all trades play out as smooth as the previous one. If you're completely new to trading, I recently published a beginner-friendly guide that covers the basics. For a full platform walkthrough, check the beginner guide link below. The trade is out of the money at the moment, but it is far from the end. Bearish momentum seems to build up. It needs to hold only for a few more seconds. The indicator criteria are still met, so I consider to keep riding this wave. And I place another one in this direction. Initial push did not turn into momentum. Strong pullback, doji candle with long wicks. Sign of a possible trend reversal. The first quarter of the expiration passed only, so there is still time, but it is a bit worrying. This is where patience matters. This also looks like a doji, but it is obviously weaker yet and unfinished. And it finishes differently. Three candles suggest the trend might reverse. Only a strong correction can save this setup. This one didn't work out. Even after 2 losses, the session is still in profit. I could possibly wait here for another entry candle since the indicator conditions are still met, but in another instrument might already have a proper entry. And when using this strategy, it might be better to look elsewhere after a losing trade anyway. Also, the payout level dropped to 75%, which is less appealing. So I'm looking for another entry. Several setups appear, but not all conditions are met. With enough screen time, filtering them becomes surprisingly quick. If you spotted a valid setup I overlooked, let me know in the comments. This is a proper bullish setup. Recent candles are strong, but not too big. I am taking a buy position. Initial pullback. Completely normal after the previous strong candles. And it becomes painful in the middle. There is some sign of a possible recovery. Even if it fails, risk is partially controlled. Let's see if it holds now. An uncomfortable retracement. 7 trades, 2 losses, and a profitable session. Not every setup worked, but that's exactly why filtering and risk management matter. Next time, I'll test the same strategy on the real market. Thanks for watching.